All right, everybody, what's going on? This is Ryan, also known as Cantor and Clark. And in this video, we're going to talk about who secretly controls the price of Bitcoin. And all jokes aside, all right, we're not going to be talking about any conspiracies, or we're not talking about any particular individuals specifically. All right, as you can imagine, what we're referring to, as I've referred to ad nauseum and as BlockRoots members are very familiar with at this point, it is the heavier hand in markets. So the heavier hand, in this case, the who, okay, and how they secretly control the price of Bitcoin. So by control, I mean how they influence the price action or the direction that Bitcoin resolves in. When we're trading, so if I'm trading equities, for example, and I'm trading the SPY or the S&P, do I want to be behind the odd lots, like the 2-lot trader or the 10-lot trader, or do I want to be behind the 10,000 lot trader? All right. I want to be in line with the institutional order flow. Okay. Now, there is a high likelihood that they have a more informed decision than I do. Okay. And if they are accumulating something, there is likely good reason for it. So the same can be said throughout all markets with all assets. So we want to be in line, all right, or behind the larger entities. So they're going to be the ones that are pushing price around. Now, in traditional markets, information access, okay, sophisticated tools to be able to pick up on this type of information is hard to come by, all right, if you are an average Joe, all right, it is typically, it is very costly. Now in crypto, this access and this information is available a lot of the times for free because we have people constantly developing these platforms and the exchanges are offering it, okay? Or there are platforms right now that are very affordable, okay, that give us access to the atomized or granular information when it comes to price action and the auctioning environment. So what actually goes on at certain levels, okay, rather than just arbitrarily assuming that a support or resistance is going to hold or an area is going to be important, okay, we can have a more informed decision by seeing just exactly what the behavior of buyers and sellers are at specific areas. So when I trade, I'm not going to be primarily marking up just the higher time frame daily closes or the weekly closes. Okay, this is important from a visual standpoint. Okay, in that we have visual confirmation at these levels, but for the most part, what I'm interested in, okay, is price and volume. Okay, specific auctioning areas where buyers and sellers, there is a heavy amount of interaction between them. Okay, because this is typically going to be where your larger traders are going to be getting in and out of the market. All right, in this way, they can get in the market, all right, in a less telegraphed manner. Okay, they can get out of the market in the same way, and they're not going to be giving away their intentions. Okay, so they're not going to be entering in at market. Now, sometimes larger traders on their own will try to push the market around to create some type of stop run or cascade, and this comes at a cost, but they know that they will end up throwing the market much further as a result of it. But for the most part, they're going to be trying to absorb the active order flow, okay, because they're exercising through more passive means. So when I'm marking my charts up, I'm not just going off of daily swing highs, okay, on closing candles, okay, and your daily opens or daily closes. All right, as I said, this is great for visuals, but this doesn't exactly give us a complete picture. It doesn't really give us a complete context, right? There are many times when the wick has a majority of the volume, okay? When you have a daily candle and the wick is where a majority of the volume took place. And you can begin to see this based on the interval that you look at. So if you look at a 4-hour bar, all right, it is 6, there are 6 4-hour bars within a daily, okay? So we can begin to break this down and have a more clean idea when we go down to the lower time frames. But nevertheless, unless you're going to go all the way down to the 1-minute chart and then all the way back up to the 4-minute, all right, this is a tedious prospect at best. So there are times, as I said, where we could look at a wick, and it could be even a wick on a 1-hour candle, and a majority of the volume took place in the wick, not in the candle body. Okay, but as a function of just the visuals alone, okay, in psychology, we will tend to put more weight into the candle body because it's larger, right? So it's a larger, more massive thing than the actual wick. So in some way, that actually influences our decision making. Now, that being said, there are many times also where there's no volume that took place in the wick. So these are things that you are going to want to know, right? Instead of just taking everything, okay, at best guess, okay, or at a coin flip, okay. Now it's important that there are times when traders do operate on the default setting that, you know, every support test is worth longing, right? So you long support until it is no longer support. So when you're a price action trader or you're a levels trader and you're trading horizontals, it is good to have a system that you rely on where you hold to your system, okay, and your default setting is to sell resistance and to buy support. But there are many times when it is actually worth selling support, all right, especially when support is no longer supported by, as you can guess, the heavier hand. So when I am marking my chart, what I will do is actually first look at volume profiles. So I'll go to the fixed range and I will look at certain rotations. So from here to here, okay, from here to here, right, here to here, okay, and then this complete picture, all right. And you can see how we have these black lines. These are the volume points of control. So for each volume profile, this is where a majority of the trading volume took place. And then you'll see that on the left, there is a volume profile, and it'll show these high volume nodes and these low volume areas. And then it'll show you the value area where a majority of the trading volume took place. And I will mark off, okay, the value area for each session, okay, or if I'm going by the week or the month or the day, the value area where a majority of the trading volume took place, in this case 70%, and then I'll mark off the extreme low and extreme high areas. So the ledges, okay, if there's a drastic drop, I'll mark off a ledge, okay, because price will typically come to a ledge before reversing, and I'll mark off the high volume nodes along with that. So if I'm just going over this again, I'll go from this rotation to here, okay, we'll just do this entire rotation right now for the most part. So I'll do half of it and then I'll show you what it'll look like if I do the whole. But now if I'm marking up each area, as I mentioned, okay, we have the high volume node here, okay, extremely low right there, okay, this is the point of control, okay, this is the value area down here, all right, and if I had the value area matched over here, okay, where the blue turns to gray, okay, you can see how this translated moving forward all the way into October, okay, see how price is still confined, all right, within the same trading range that it was over here. Now again, visual, okay, there's a visual aspect to this because these are the areas that we're looking to. But this is also because larger traders are going to be placing orders at areas that they are interested in, understanding that price is likely to revisit this. So this is also one of the bases behind monthly and weekly opens, all right, depending on if we are selling it or if we're buying it, all right, depending on what direction we are visiting it from. So to clean this up a bit, put this back on, okay, I'm just going to show you how this translated up into where we currently are. So I'm going to take this, okay, the value area, high volume node, point of control, extend that forward, the value area down here, which is where this ledge is right here, okay, and then I'm going to take another profile for this whole top, okay, I know how it played out on the top already just for the sake of this video. I'm going to do the whole one now because it had switched. It was from here, okay, down to here. All right, so this is going to evolve over time. So as you can imagine, since I took it all the way to the right, that this volume point of control might have been different as we moved along. And for that reason, you can actually use the volume point of control setting that shows you how it evolved over this period. But for the sake of this video, I'm just going to keep it like this. So for that session, okay, and then if we go down to where we currently are, all right, what we can see is go down to 2 hour. Okay, we begin to see how these areas were important, all right, even all the way up until this point. So if we go back, okay, all the way back here, okay, even if we mark off the lowest volume area, right, so the area where there was the lowest volume right at this ledge, okay, we come all the way over here, you can see exactly where this new line lined up. So this is exactly where this line lined up moving forward. All right, so moving forward, you can see that these areas are still, that were once previously heavily contested, they are still very relevant moving forward. Okay, so keep that in mind. The volume point of control, okay, where the most volume took place, all right, and then the high volume nodes, all right, the value areas and the extreme ledges. So where traders were once interested, they're likely going to be interested in moving forward. And the whole visual confirmation of this is only going to further the case. So now if I'm looking, okay, at current price action, right, if I'm looking at this ledge right here, so we'll take this out again. Okay, this was the point of control. All right, we have this range right here. Okay, now we have a more clear idea. So when price came down here, all right, so this is the last 2 days. Okay, this is the point of control for the last 2 days. When it popped upward, all right, the first area that we came to retest was this node up here. So you can see there was a heavy amount of volume that took place right here. You can spot this with the naked eye, all right, if you're keen to it, that a majority of the trading volume was within this tight range. All right, and this is the area that we rejected from and moved back down to, again, where? Back down to the volume point of control for this structure right here. So rather than just trying to identify where there was a great degree of confluence between candle closes, okay, and wicks, what we should go off of is where a majority of the trading volume took place, okay, where buyers and sellers were most interested. All right, so this is going to give us a clue as to what levels are important. And then I was talking about how there are some very useful tools to pick up on where we could find certain absorption, right? So absorption is the method that larger traders are going to, or it would be how you would describe them getting into the market. So when price is being aggressively sold to one of these levels, so say we're looking at this level right here, okay, or rather if we go down, if we're looking at these lows, so this right here was where the next volume point of control is, so fixed range, it should be right around there. Let's see if we're on, up, just a little bit higher. But nevertheless, if we're looking at these lows, one of the reasons the other day, okay, or rather, I think it was yesterday, God, the days just roll into the next. One of the reasons why I was short from up here, all right, and then as we approached here, I was going to hang on to my short because I had a good stop, all right, I had a good trade entry, but I flipped my bias immediately. I let BlockRoots members know it was because I was getting new information, all right, in order flow. So you can use tensor charts, you could use exo charts, you can use signals, which is a new one. And I was just talking to one of the guys the other day about this platform. And this is a volumetric platform. So this is going to show you where there is a heavy amount of volume that took place. Okay, this is going to show you again delta. This is one of their own proprietary indicators, and it's going to show you imbalances. Okay, so exo charts is going to more or less show you the same thing, and this is going to give you a more complete footprint. So if we zoom in right now, okay, if we actually, let me just set this up a little bit easier. What we can see on each of these candles is we can see exactly, all right, how many trades hit the offer, okay, how many hit the bid. All right, so I'm going to zoom in. If I could just line this up, all right, so we could see exactly how many trades hit the offer, all right, on the right-hand side, and how many hit the bid on the left-hand side. So aggressive selling, aggressive buying, all right, and then when we look at this at certain areas, okay, when we take into consideration something like delta, all right, where we're talking about the difference between those two, we have delta, which is the difference between those two, and then we have cumulative volume delta, which is a running total of this, all right, this is how this number changes over time. We could begin to look at a certain level, all right, so look at a level like we had marked off, like this low, so like we were looking at this over here before Josh and I got long, we started to see at this level that although there was a tremendous amount of selling, okay, in the form of market orders to sell, all right, hitting the bid, price was not moving. So price not moving, there is someone on the other side of that order. All right, so a market order needs a limit order, right? So you're not going to have a market order just hitting another market order. It's a market hitting a limit order. So someone is providing the liquidity on the other side of that. And it's not going to be necessarily readily available on a heat map, okay? It's not going to be that obvious, right? These entities are going to be entering into the market, as I said, in a very secretive and surreptitious manner. So when we see that we have a level, all right, that is an area where there is a good amount of volume, okay, we have sellers in this case aggressively hitting the bid with market sells, okay, delta is decreasing, all right, negatively rather. It's getting increasingly negative. Okay, and then you could look at something else that's important, which would show you the high and low candle, right? So the high and the low of the candle. So if we look at a candle, right, that has an increase in cumulative volume delta, okay, so say in the case that price is moving upward, all right, so just to draw this example out. So say we are retesting this high, okay, and these are the things we go over at BlockRoots members. So say we are retesting this high, okay, we're coming up, okay, price bounces off this high, all right, and then attempts to test this high again. Okay, so that is the actual price action, right? Now let's say that, for example, we're looking at delta. So delta in this case follows price. Now it doesn't lead price, okay, because delta is, or rather, delta is showing us market executions. So the heavier hand is going to be usually in the limit. So market executions, those are going to be your smaller guys, your odd lots, and they're not going to have a tremendous amount of influence on the market. Now when these line up, when passive order flow and active order flow line up, that's when you have large moves. But when we see that, for example, at a level, cumulative volume delta is rising much higher than the actual price is, okay, that gives us an indication in that the heavier hand is right here, all right? Market executions are rising, okay? And if we look at something like the actual high-low of the candle and it's actually smaller, okay, so we have more executions to buy, okay, or more offers lifted, but the candle is smaller and the price action didn't follow, all right, what does this give you insight into? It gives you insight into the heavier hand being the limit order above selling, okay? And if there is a large seller above, they're not selling because they're thinking price is going to go up. So you could begin to use this to gauge higher time frame directional bias, okay, at key supports and resistances. And you can use this if you're a price action trader, okay? If you're a price action trader and you are just going off of candle closes and you're not looking at volume and you're not looking at what goes on at this this smaller level, okay, and I don't mean smaller as in the 5-minute chart or the 1-minute chart. What I mean by that is the actual exchange that's going on at these levels, okay? If you're not able to identify this, then, you know, a lot of the times your actions are going to be based on, you know, what the type of response that the candle, you know, the type of response that we see in price action, or, you know, whether it's 3 touches, you know, there are these, more often than not, they're not arbitrary, but they don't necessarily hold up as much as the actual insight that we get when we have more information in the form of being able to identify whether or not there is some invisible hand at this level or not. So this is free stuff right now for the most part, okay? It's at a cost on some of these platforms, but, you know, if you don't want to use Sierra, okay, and if you don't want to use tensor charts and pay for these things, you can access, you know, for now you can go to EXO, you can go into Signals, and you can begin to familiarize yourself with this. Now, this is not something that I would say is an edge that's going to be arbitraged away, because when you're learning about this, okay, you're actually learning about not just market macro structure, okay, not just the technical 101s, okay, you are learning about the actual dynamics that occur in the auctioning environment. You're learning about microstructure. You're learning about, you know, this is auction market theory. So you're learning about the actual, let's say, ebb and flow or push and pull between buyers and sellers. Okay, it comes down to supply and demand. So this is a one-take thing, so excuse me if I've just my mouth got a little sticky. I think I need a tablespoon of honey. But nevertheless, this is the way that larger traders are going to be operating. Okay, they're going to be operating through passive means. Okay, so we want to be in line with them, right? And as I said, I want to be behind the larger traders. Okay, it's not an ego check to assume that, or rather to admit that I am not the whale. Okay, I want to be positioned with the whale to become the whale. All right, to join the whale pod in this case. So when we begin to notice clear divergences, all right, I would say that this has one of the highest hit rates. All right, when we notice very clear divergences between passive order flow and active order flow or aggressive order flow for this reason, because there is a larger, heavier hand on the other side that has more pull, okay, more gunpowder, and is the opponent that you want to be on the side of. So I mentioned this in my post today. If we are looking at a particular level that we would be interested in moving forward, so if, for example, I'm looking at this level right here, okay, let's get that tool back out. So looking at fixed range, okay, this is the area that we came up to, the volume point of control, okay, where a majority of this volume took place. So if we see that if we just, with a horizontal line, take this node, okay, to the bottom of this node, all right, we're left with this area, which is the bulk of this area, rather. So right here to here, okay, when we revisit this area, all right, if at all we see that price is consolidating, okay, this is where I'm going to pay more attention to just what's going on within this consolidation. All right. Do I want to just assume that, you know, a consolidation at resistance means that it's bullish? Okay, not necessarily, because consolidation at resistance also looks like distribution. So we need more insight, and that pretty much covers that. All right. Just wanted to keep this short, but I can never keep this video short. I don't know what's wrong with me. I need to put a timer out. I need to script this stuff. That's why, because I'm just like flying by the seat of my pants. No script, but I just want to keep it real with you. And yeah, and then say things like keep it real with you, which is, if I'm keeping it real, not too cool. So that's that, guys. Hopefully everyone has a fantastic Halloween. If you are celebrating Halloween, or if you have kids, okay. Normally it's not cool to accept candy or anything from a stranger, but today for some reason it is. So that's that, guys. As always, exercise proper risk management, trade effectively, and start familiarizing yourself with these concepts. Because if your plan is to last in the long run, okay, if your plan is to be able to trade multiple markets, this is a way that you can trade crude, you could trade gold, you could trade plenty of things in this manner. It gives you more insight, okay, and more, I would say, actionable information than anything else. Okay, we are seeing who holds the better hand, right? So that's that, guys. Everyone have a fantastic night. As always, it's been a pleasure.